So as we talk, the economy in the United States seems to be sinking a little bit. The stock market is not in good shape, I would think people would say, and the real estate market may not be in so wonderful shape. So are you worried now that the economy is heading into a recession? And is that making you feel not so bad because you can buy things at the bottom of the market now?
I think liquidity is the theme of what's going on out there. I mean, unfortunately, I think that some of the policies implemented of flooding the market with money are coming back to bite us. And I think that we have to reduce that liquidity. And in the process, we've created, significant inflation that I think is only controllable by raising interest rates and maybe putting us into a recession.
We're not in a recession yet, in your view?
No, no.
And you've seen this picture before where governments say we're going to raise interest rates, get rid of inflation, but it usually produces either stagflation or a recession. So you think that's likely?
Or the Fed chickens out. I mean, unfortunately, I've only been around this business for 50 years. But in that 50 years, I've only had one Fed president who ever said and did what he said, and that was Volcker. Every other, Greenspan and all the rest of them have all talked a good game, but when it really came to pressing it, didn't press it.
Well, let's talk about let's suppose the chairman of the Fed, Jay Powell, called you and said, Sam, you've been around a long time. What should I do? Should I keep increasing interest rates to get rid of inflation, or should I worry that that will produce a recession? What would you advise him to do now?
I've advised him right now to raise interest rates significantly. I think that, as big as 75 basis points sounds, I think that they could have easily raised interest rates 1.25. I think that, what we have to do is we have to break the inflation mentality. That's why we were able to, quantitative ease and not create inflation, was because we hadn't created the mentality. Now we've embedded in people an expectation of inflation that goes into everybody's pricing, goes into everybody's plan, and that's not healthy for the country.
You may remember in the late 70s when Paul Volcker was the chairman of the Fed, I was working in the White House then. One weekend he increased interest rates 200 basis points without giving any telegraphing notices in advance. So something like that you think is necessary in the future?
Well, I don't know. I mean, it's hard to quantify, the solution. Although I kind of want everybody to remember how low interest rates are. I mean, we survived for a long time with the risk-free rate at 5.5. We now are up, I don't know what, to 1 3/4 or something. I mean, we're really, there's a lot of room. And I think, by the way, that when I say there's a lot of room, I also think that interest rates could go up a couple hundred basis points and not throw us in a recession. Because I think that there's been just so much capital splashing around that I think, the first kind of major swallows of reducing that excess flow, I don't think are going to have quite the impact that the stock market is reflecting.